there, everyone, and welcome back. And let's go on and move into the charts. We'll take a look at what we have, though, on economic reports. We will have a PPI at the bottom of the hour, and later on today, at the close of the day, we'll have API. But it looks like the only thing we have on tap is PPI. We did have the German zoo numbers, which came in earlier, a tad bit weaker. And we had Spanish and German inflation numbers. So today, from yesterday we had support at 630, and the bottom today is 630. Like I said, our bias chart resistance is for the day as it rolls into the next day. So support is 630, the low is 630. Let's go and take a little bit closer look to see what we have developing for the day. The 602 was key on the 2-hour chart to get this thing going. We have the 38% right here of this entire move. Now, if the shorter move here comes to 642, but this is at 38%. Now, it's a relatively quiet day. Obviously, as we go into FOMC, people are pulling in the horns a bit. People aren't going to push anything. Obviously, the risk is, what if the dot plot suggests that they'd be a little bit more aggressive? That's why we're seeing this market continue to weigh down. Gold, on the other hand, gold's working a little bit higher. We're at 1205 right now. So when we look here on the euro, we're still in the buy mode on the 30-minute. Maybe 606 is pretty decent area here. If we really want to push a little bit harder, it would be coming in at 595. That'd already be a pretty big fall already, considering we've already fallen, but we're going to mark this 595 as our support, where the market could go in and shoot down to, this 602 is pretty solid here, but if they want to push further, then you could look at it around 595. It's still quite a ways out to fall back. We'll go and mark this here. Lucas says, good morning, Paul. Do you expect a dovish hike to provide more fuel to stocks? It may. I'm not really too much looking at stocks, but I do expect the rate hike to be basically construed by the market as a two and done, meaning they're going to take two. They'll have the rate hike in December, and then this one, if that's the case, is going to be and they would sit back and watch. I don't think they're going to be trying to press ahead. They, you know, for all the criticism that the Fed took, they've done a masterful job in engineering to get the economy back to this point. Not that it was all them, but nurturing the economy and helping along. They're not about to shoot themselves in the foot by trying to turn around and raise a third time in June. It's just not going to happen. It's just not going to happen. So I would expect essentially a two and done. They sit back and see the effects of the economy over a 6 month span. And we're going to be taking our time, obviously, because the markets are so slow. So we're going to mark this off now at 595 for support. Support today was pretty good. And let's go and take a look at resistance. I think we can go back to the 30-minute to get a little bit closer look. I think for resistance, you have to look at this 679 here. It might be a hair higher. We'll say there at 683. But you can see here this 679 was key. So once again, just like we said about the 602 down here, maybe they can push it to 595. Same thing, 679, maybe they can push it up to 683, 683 that is. And let's take a look at the cable here. We had 2142, 2288, and it's already gone beyond that 2142. Of course, we did get Nicola Sturgeon demanding another vote from the Scottish referendum. We did mark this off just earlier. Let's take a look at that, where that comes in at. 2113. Oh, I like that area there. I like this 2113 right here because you can see that right here, this close and open here, and that coincides with this stab here and here. So we're going to mark the 2113 as support. It's already gone down there, but I think that is support. In the sense that if any moves down there are going to be supportive, or market, you'll see the market trying to make a stand. We've already fallen quite a bit. As far as resistance, we'll probably be right there just before we get to those highs. It should be 22.31, so 100 pips up above. Obviously, the market remains still quite bearish. Next up would be the Aussie dollar. It's come off its lows, but it's basically just staggering here. See, we made this run to the 38%. We've eased off, and right now going to this FOMC, first day of the FOMC, seeing the euro at 6.31. There's just no need for anyone to go and be pushing positions because there's still the unknown. I think that the thought will be that as I said, I think most people believe. I don't know if we're going to call it dovish rate hike. I don't think it's necessarily considered a dovish rate hike because the thought is, are we going to try and raise maybe 3 times this year or 4 times? I think that it will be communicated that they will sit back. They'll want to look at how the market reacts. And I think the market to those rate hikes, and I think that they may package it a little bit. I wouldn't say aggressive, but probably a little bit more. Will it be on point? But I don't think that the market will see it that way. I think the market will see it as, okay, it's 2 and done, and that's it. But that being said, there's still that uncertainty, and nobody wants to take any chances. So that's why you're seeing these markets trading relatively quiet or falling back in that direction because you've had, although bonds are off the lows, you're seeing the euro continue to move a little bit lower here. And anyone that bought prior, like up there close to 107, they're really stuck and singing the blues and thinking, oh my God, I should have bought, I should have waited, how much lower can it go, things like that. So when we're looking at the Aussie and we had resistance to 76.16, we're going to let this run but I think obviously it's above, not super way above because obviously if we get on the FOMC, the resistance probably be closer to it is 76.53. But for right now, we're going to leave it at the 76.16 here on the Aussie dollar. And support we have marked up at 75.31. I'm going to give us some extra room. We're going to make it 75.03. Clearly bearish, or remains bearish. There's our 76.16. Nothing's going to happen, I don't see at this point. They released that economic report business index, and it didn't even really move the market. So we're going to start to adjust this for the FOMC. So we're going to move this up higher to adjust for the FOMC. And we're going to put 76, matter of fact, let's go with the 76.46. So we're going to adjust it for the FOMC now. Because nothing happened. That business index that came in weaker, but it still held above the 5. Didn't even move this nary a bit. So let's go move into the Kiwi. And I'm just saving the workspaces in case something happens, which inevitably does happen. Don't want to lose my work. So we had 68.84 and 69.76. And this market is about trading as quiet as it can be. We're going to mark it right there for support, 68.74. Same thing, giving a little bit of extra room for the FOMC. So 68.73 is going to be support. It's not much lower, but this market isn't moving either. Resistance on the upside, we've had this marked as its key level, the 69.76. We're going to move it up here to the 70, right there, 70.18. Same thing we're going to allow for the start to factor in the FOMC. Obviously, if the dollar sells off, that's just going to be a stopping point, but just a pause. But I like that area right there, that 70.18 area hit right there, which challenges prior high. It'll be up to the 23%. So the next step right here is the Canadian dollar, and we'll take a look at that right before the break. Hang So we had marked off 35.05 as the high. Now we read the story that the Canadian dollar is trying to strengthen a bit. We saw the narrowing of the spreads on the interest rate spreads. That is, we're trying to, like I said, it's strengthened a little bit, but look where it's come. I mean, it's almost been from the bottom that it's strengthened from. Because it's obviously an inverse relationship with the dollar versus the CAD. So we had 35.05 as a resistance. Well, we're going to go in just as we did with the others. We're going to go and start to factor in the FOMC. So I think we have to go and move this up here to this. I've got 35.58. Yeah, we're going to keep it there, right? So we're going to move this up to 35.58 for the resistance. Factor in the FOMC. And let's take a look at the support. Widening this out for the FOMC, I think we have to go with this right here, 33.52. So the 35.58 would be the resistance on, and as I mentioned, these markets aren't going anywhere. You can see the tight range we've been in. Literally, like some of these, these are. It's not like this is a 5-minute chart, and some of these moves are, 10 pips. So we're going to go to 35.58, and right here, 33.53. These markets are going to stay relatively quiet until tomorrow afternoon once we get the FOMC announcement. And then more importantly, we see the press conference, what are they looking at as far as the dot plot. So going to break right now. Obviously at the bottom of the hour, we're going to PPI, but once again, let's see how much this is going to move the market in a very quiet trade. So we're going to take a break now.